Hi, Karen Deis here, bringing you the latest rule and regulation updates for you, your real estate agents, and your builders over the last 30-day time period. We're going to kick off this session with a couple of Dodd-Frank updates that you need to know about. Now, the first one is a humongous piece of legislation that affects everyone: real estate agents, lenders, ad agencies, loan modification companies, even servicing companies who are offering refinances to their current customers are covered by this law. Now, what it basically means is if you run an ad, or anybody runs an ad, that even mentions a mortgage term, the Reg Z rules and the 19 prohibitive practices outlined in this law kick in. So let's say you mention 5% down. Or you mention, or you're part of the liar's page in the newspaper. These rules kick in, and they go to great lengths to explain what commercial communication means. It could even mean your voicemail message, anything that you have on the internet. There are tons of different communication methods that are covered by this law. The other thing is that you'll have to keep records of your ads either electronically or printed for a 24-month time period. And since it also affects your real estate agents, we've created a mortgage talking points that you can share with them outlining the 19 different prohibitive practices. Now, the next thing you probably already know about are the 5 credit score disclosure forms that go into effect on August 15th. Each one of them covers a certain set of circumstances, but the key thing here is that if you send out an adverse action form, you must also send out a credit score disclosure form along with it. So now you're sending 2 forms, and if you have 2 or more borrowers, they each have to receive their own form because they have their own credit score. However, co-signers and grantors are exempt. Even though the loan might have been denied based on their credit score, you don't have to disclose it to them. The other thing is that there are sample forms that were outlined in the Dodd-Frank legislation. We have the 5 form examples for you on the website, but if you're going to change any of it, I recommend that you get legal counsel before you do change it. USDA. After months of confusion about outbuildings, USDA has finally come up with a national standard because there wasn't one before. Their memo is fairly detailed, but the bottom line is that any outbuilding or any property, home, that could be used as income producing will not be able to be financed USDA. Now, there are 3 categories, and there's some nuances where they do allow some outbuildings to be included in the property. But they have the 3 categories are called farm service buildings, income producing properties, and related outbuildings. And again, you'll find a mortgage talking points for that on the website. Now on to FHA. We just discovered that FHA has a newsletter that they send out to appraisers to help them comment on certain appraisal conditions that might show up during their inspection. Now, one of them that we thought was interesting this time around was called stigmatized properties. And what that means is that it's a property that may have been in near a toxic waste dump, had a grisly crime created there, may have been a drug dealer or manufacturing house. Now, unless it's prohibited that it's not disclosable by state law, the appraiser must make a comment about it. Now, also in July, we told you that FHA was planning on changing the loan limits in about 700 counties throughout the United States. The VA came out and said, wait a minute, we're not going to change ours till maybe December 31st because we're under a certain set of different rules and regulations. So be sure that you look at your counties for the FHA. There's a link on the website for the counties. And then VA, they're not going to change till December 31st. Also in July, we mentioned that FHA has totally changed the way that they were approving condos. And there was a 95-page booklet that you had to go through. One of our subscribers suggested that we create a checklist instead, which we've done for you, that you can share with your real estate agents and homeowners associations, and it is posted in the charts and checklist section of the website. And finally, moving on to Fannie and Freddie, there hasn't been a whole lot of changes there lately, not much going on. But one of the things that you need to get up to speed on is the uniform appraisal data set ratings that'll be starting October 1st and appearing on the appraisals. For existing properties, they're going to be rated from C1 through C6, which C6 is going to be a bad thing. And for new construction, Q1 through Q6. We've explained what they all mean in the article, and we've created a mortgage talking points because I can bet you that those clients are going to be asking your real estate agents and you exactly what those ratings mean. So, hey, thanks for viewing this August 2011 edition of Mortgage Currency. And remember, as a subscriber, you get mortgage talking points, charts and checklists, Facebook posts, and you get your underwriting questions answered through the help desk, which may even help you save a deal. Thanks for listening.